Hello, welcome to the European Open briefing for Thursday, February the 2nd. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So the main news this morning is, of course, that decision by the Federal Reserve yesterday, where they held interest rates at the current rate of 0.5 to 0.75%. The dollar fell, though, after the decision as the FOMC statement wasn't quite as hawkish as many were expecting, and that benefited gold, which is up at 1-week highs today. It also lifted other currencies. The pound hit $1.27 this morning, although the pound is also benefiting from that clarity being provided to the markets on the UK's Brexit path. And another notable move this morning is the Australian dollar, which jumped over 1% higher on very strong trade data out of Australia. So let's start with the dollar-yen pair. We can see that the dollar had rebounded yesterday above, near the 114 level against the yen. It's currently back below the 113 yen, and that the downwards drift comes after the Fed failed to provide any clues as to when the next rate hike in the US would come. In the FOMC statement, the Fed did sound much more optimistic on the inflation outlook, but they didn't really give any direct signals as to whether or not we will get another rate hike at the next meeting in March. And as we know, back in December, FOMC members had projected 3 rate hikes in 2017. The markets aren't quite convinced yet, and they're only expecting 2 rate hikes. Let's move on to the dollar index and treasury yields. We can see treasury yields on 10-year notes have recovered a little bit this morning, but the dollar index is not doing too well. It's at 12-week lows. It hit a 12-week low of 9.427, and that's mainly on the Fed FOMC statement and also on ongoing concerns about the US President Donald Trump's policies. Of course, we still have the fallout from that immigration ban on 7 majority Muslim countries, and yesterday we also had, or rather the day before, we had those comments by Donald Trump himself and his top trade advisor Peter Navarro that countries such as Germany, Japan, and China are manipulating the currency markets and taking advantage of the US. So all of those worries outweighed rather positive data out of the US yesterday. The ISM manufacturing PMI hit a more than 2-year high in January, and we also had the ADP employment report, which is the private job survey. The official one, the non-farm payrolls, is due on Fridays. So the ADP one is a close indication as to what we'll get, what we normally get in the NFP one. And yesterday, the ADP report showed job gains of 246,000 last week, and that's the highest since June 2016. So if we do continue to see a strong labor market, it's very likely we could get another rate hike in March. Let's move on to the UK pound now. We can see the pound, it hit $1.27 a very short while ago. It's currently trading just below that level. The pound is benefiting from the reduced uncertainty surrounding Brexit. The UK Parliament passed the Brexit bill authorising the British government to go ahead and trigger Article 50 at some point in March. There's still possible that the bill may get some amendments, although even with the amendments, it's looking very likely that the UK government will be able to trigger Article 50 by the self-imposed deadline of end of March at the latest. Of course, on March the 9th, there is an EU summit, and Prime Minister Theresa May is hoping that she'll be able to use the summit to give formal notice of UK's withdrawal from the EU. And also, we will get a Brexit white paper today outlining some further details on the government's strategy of a Brexit. And all of that is benefiting the pound. And of course, it's worth mentioning that later today we have the Bank of England policy meeting. We will also get the quarterly inflation outlook and a press conference by the Governor Mark Carney, where the bank is expected to sound slightly more neutral. and will likely upgrade the UK's growth forecasts. So all of that, the fact that it's looking less and less likely that we will get another rate cut in the UK is also helping lift the pound. Moving on to the Australian dollar. It's up more than 1% today, mainly on very strong trade data. Australia's trade surplus jumped to 3.5 billion Australian dollars in December, beating estimates of 2.2 billion. Exports were 5% higher in December, and it's looking like in the fourth quarter Australian growth will rebound after a surprise contraction in the third quarter, and all of that is lowering the odds that the RBA will cut rates at any time soon. So the Aussie is near 12-week highs. It hit a 0.7668 a very short while ago against the US dollar. And finally, let's have a look at commodities. Gold is also doing well. It's benefiting from the cautious stance by the Fed and the weaker dollar. It hit a 1.5-week high, $1,217. Oil, on the other hand, it's been a bit volatile because yesterday it dipped a little bit after a bigger than expected increase in US crude stocks, according to the official EIA data on oil inventories in the US. Although there were reports that Russia has cut output by more than expected, so that offset the crude inventories data. So oil has more than recovered that dip after the inventory data, and it's currently trading just below $54 a barrel. Let's have a look at today's economic calendar before we go. We've got the Australian trade data out earlier today. We're going to have the construction PMI out of the UK, as well as Eurozone producer prices. But the main focus will be the Bank of England monetary policy meeting and the press conference. No changes expected there. And in the US session, we will have the latest weekly jobless claims. That's it from me. Thank you very much for watching, and have a great day.